Our third ticker of the day is Kellogg. The stock falling after the company announced it is selling Keebler, Famous Amos, and other snack brands to confectioner Ferrero. The $1.3 billion cash deal is expected to close by the end of July. Yahoo Finance's Brian Cheung is joining us to talk more about this deal. Brian, it seems like we've got two companies on two different tracks. You've got Kellogg trying to divest some of their assets, and Ferrero, which has been on a bit of a shopping spree.
Yeah, definitely. And this is kind of an industry-wide story. We've actually seen a number of other large companies and conglomerates actually try to divest or spin off their candy businesses. Don't forget that it wasn't long ago that Kraft Heinz spun off Mondelez, that actually has a lot of candy products as well. And actually, it was the same buyer, Ferrero, who only last year purchased a number of snack and candy brands from Nestle. That was a $2.8 billion deal at the beginning of last year. So Kellogg doing the same here. The stock price is actually interestingly going down now. And this is a kind of longer story for Kellogg when you consider the fact that this is a company that has been trying to grapple with getting more positive growth. Right now, it's about 1% growth yearly, and the CEO, Steve Cahillane, has actually tried to implement a number of new initiatives called the Deploy for Growth strategy, which try to involve getting the company to 1% to 3% growth. This is obviously part of what they call the M&A strategy within that plan to try to divest and focus on some core brands like, for example, their snacks and also their cereal, which they will now be doubling down on with the departure of their candy brands to Ferrero.
You know, like so many brands out there, Kellogg's also having to deal with shifting consumer tastes. A lot of people not as, big on sort of these packaged products anymore. Beyond divesting some of their assets, what is the strategy for Kellogg on the product side?
Yeah, well, Kellogg is probably betting on a lot of the changing consumer trends, as you mentioned, with regards to healthier, more organic foods. For example, on the cereal front, for example, they've been prioritizing their Kashi brands as something that can help them grow in the future. And this is a company I want to mention that's still grappling with this. Actually, their earnings call was only, 2 months ago. And in that call, there was some discussion about how this Deploy for Growth strategy would fare in the future because of the fact that they're also taking so much investment into the program, a multi-million-dollar project to try to streamline and figure out if they can get their brands to juice more revenue streams. For example, they have the Cheez-It Snaps product, Rice Krispie Treats Poppers, Pringles Wavies. They're taking existing products and trying to basically put it into a new spin, hoping that consumers buy it. Whether or not that strategy works out is something that I think investors are weary about, and that's why you see some of the price movement today.
And while we're following the Kellogg ticker today, on the other side of things, Ferrero, what are they building out with their additional acquisitions?
Yeah, well, Ferrero is betting big on the just the uptake for their candy brands. And I think it's interesting to your last question, too, about the idea of people trying to pivot towards healthier foods. Actually, the candy brands have been doing fairly well, despite the fact that we talk so often about consumers, for example, not wanting sugary things or having less affinity for those types of, brands, not just in the candy space, but also in the drink space when we talk about Coca-Cola as well. But what's interesting is you think about Kraft Heinz as a model for this. In 2015, they effectively split off Mondelez, which was their brand portfolio that had the more sugary foods. And actually, if you look at those portfolios over the past 4 years, it's actually Kraft Heinz that's gone down by 49% in terms of their stock, and Mondelez is going up by 44.8%. So actually, the story, if you look at the financials as a matter of the stock market, it actually favors the more sugary candy brands as opposed to the more health-conscious, more focused, streamlined portfolios like Kraft Heinz and maybe Kellogg's going forward.
Okay, thanks for that, Brian. We'll check back in with you a little later in the show.